Hey everyone, welcome back to 𝐅𝐫𝐞𝐞, back here with another video. This is episode 85. In today's episode, we're going to be talking about the Robinhood IPO and its ridiculous valuation. We'll also be going through the portfolio update as well later in this video. So yeah, let's get started. Alright, so Robinhood went public on the 29th of July 2021, and that was a few days ago, with a share price of $38, which gave it a valuation of $32 billion. In my opinion, I think that is just overvalued, especially when it comes to the tech sector. Like, it is really overvalued when you do come at, like, look at these new IPOs. Like, for example, DoorDash, that was a ridiculous valuation. Robinhood at $32 billion is just, you know, insane. I don't think it's right. Like, when you do look at IPOs from around 2019, so when you do look at Cloudflare, like, its valuation when it IPO'd was about $4 billion, and I think that was a reasonable valuation for that company at the time. But like, you look at Robinhood and DoorDash, like, those valuations were just phenomenal and just ridiculous. So let's dive into this little article a little bit. So yeah, it did sell for $38 a piece, valuing the company at $32 billion, which I don't think is, you know, it is just way overvalued in my opinion. I don't think it's right. I think there is definitely going to be some sort of bubble bursting in the next, I don't know, 12 to 18 months. I think. I don't want it, but, you know, some of these are just ridiculous valuations when you come down to it. Like, you know, for example, I don't think Robinhood actually makes a profit as well. So Robinhood expects a swing at a net loss at 487 million to 537 million in the second quarter, after turning a profit in the same quarter last year. Like, so I really do think Robinhood is probably not a buy for me. You know, when you do look at it, like, they have literally paved the way for all these commission-free brokerages, and yeah, they have done a great thing, but it's not perfect. Like, you do look at it, and especially with the GameStop and AMC short selling that occurred earlier this year, like, you know, the way they dealt with that wasn't right. I know it was out of their control because of the market maker, etc., but I do think there is definitely going to be some sort of tighter regulations which will probably hurt Robinhood and other commission-free brokerages. But at the same time, $32 billion, that is just insane for a valuation for this type of company. And the other stuff with their leveraged products. I believe, like, last year that there was a glitch, and, you know, this poor kid thought he was owing Robinhood like hundreds of thousands of dollars. Sadly, he ended his life. But stuff like this is very dangerous for, you know, the consumer itself. So there has to be some sort of tighter regulations on that, making it very clear, like, what's the consequence. And if there is an error on Robinhood's part, that should not exist. And I feel like, you know, if it happens again, it's, you know, they are definitely going to be hit hard with the regulators, in my opinion. But I'd love to know what you guys think about Robinhood. Is it something that you guys would invest in? I personally think it's too expensive right now. I don't think it's worth $38 a share or even $32 billion as a company. That's just my opinion. Like I did say, like, it depends how you look at it. If you look at it when you compare it against the rest of the market, like, overall, it is way overvalued. But when you do look at it, just the tech sector and the way that these recent IPOs have been valued, it's probably about right. But I do think the tech sector, in my personal opinion, is way too overvalued. I do think there is definitely going to be some sort of crash, because the tech sector has seen accelerated growth through the pandemic and lockdowns. And, you know, for example, like Cloudflare, 18 months ago was, you know, like about $15 a share, and now it's at $120. Like, you know, that is just insane amount of growth for a tech company. I don't think Robinhood's going to see the same sort of growth. I don't even think it will see massive amounts of growth, to be honest. But I do think, in my personal opinion, that there will be some sort of tech crash in the near future, because some of these valuations are ridiculous. Like, I'm actually curious to see what. Let's have a quick look at DoorDash right now. I want to see what the market valuation is for DoorDash. So $57 billion for DoorDash. I think, that's ridiculous. Like, I don't think it's worth that much either. And I do think the tech sector is definitely going to see some sort of dip of at least like 20%, I think, or some sort of crash. That's just my opinion. I'd love to know what you guys think about Robinhood and its IPO. Have you purchased shares in Robinhood? If so, why, and what's your outlook on it? But yeah, that's pretty much my rant over for Robinhood. Let's get on to the portfolio update right now. So the portfolio is now at £17,753.24. I've invested £13,838.07. Returns at the moment is slightly lower than last week at £3,915.17. I almost forgot what currency I was looking at, and I'm up 28.29%. So it's not too bad. It's still, I would like to be above the 30%, but it's not too bad. It's only a slight dip. Let's have a look at Cloudflare since we're on this right now. So Cloudflare in the week did hit highs of $122.55. I've got 15 shares at the moment, currently valued at £1,278.21 in total. My average price is at $17.84, as you already know. And yeah, I'm up £1,065.04. That's 499.62%, so almost 500%. I did cross the 500% when it was at $120, but it is having a slight dip just before the end of the week. Airbus is actually doing really well. It did hit $119 this week, $120 actually. Sorry, 120 euros this week. So it is doing pretty well. I'm pretty happy with the way this is performing. I've only got 5.5 shares. I do expect Airbus to see a little bit more of a spike, especially when, countries do open its borders and, travel becomes less of an issue. I've got, my average price on this is €60.86. Return at the moment is £247.76. I'm up 83.99%. So I'm pretty happy with the way this is doing. And yeah, it is doing pretty well. Let's take a look at Boeing since we're looking at airline stocks. Boeing is, it did hit highs of 235 this week. I'm not too worried about this, but overall it is doing pretty good. It's up 18.2%. On overall, I'm up £125 and my average price is $173.84. I am actually kicking myself with this one because during the pandemic it did hit lows of around, if I can get to it, can I get to it? No, I can't, but I do remember it did hit sub $100. There we go, in March, and I wish I did buy a little bit more on this, but it is what it is, isn't it? So, BP hasn't been doing too well, to be honest. It is up 1.85% this week. I'm down 17.63% overall. This is something that I am actually looking to close at some point. I do think, I am slowly moving away from oil, and the only one that I'd probably keep when it comes to oil is the energy transfer, which is kind of like the midstream and not really refining or the way that's performing. Let's dive into that right now. So it has had a bit of a red week. It's down 1.6%. It's at $9.85. It's not really as good as it did hit highs of $11.35 within the 3 months in June, but it is coming down slowly with this. So I've got 502 shares and I'm up 35.34%. That's £926 in the green. I am expecting a dividend from these, or return of capital, in August. So let's see, I think it's about $70 I should be getting from this. So, a nice little top up. It probably won't go back into energy transfer. It'll probably go into something else. But I'll let you guys know what I decide on that. So, royalty income is at $70.25, which isn't too bad. It is slightly in the red, 0.34% this week. It's not too bad. It did go X. as well. It does go X every single month, so it's not too bad, but I should be expecting a nice little regular payment for this one. So I always know kind of like my benchmark or my minimum for every single month is literally the dividend from Realty Income and Main Street Capital. Add them up and that's my minimum every month, and then everything else on top is like a nice little surprise. But yeah, I'm pretty happy with that. National Grid, I've got 100 shares in National Grid. I am up 10.7%. That's £89.14. So with National Grid, I'm pretty happy with this. It is definitely a long-term stock for me, and it'll be something that I'll be keeping on for a while. And I have no plans on selling it. I do want to add more to this at some point, but for now, I'm happy for where it is. And it does pay a nice little 5.5% dividend yield, I believe, especially when the time I purchased it. 5.3%, here we go. So yeah, it's not too bad. It's doing pretty well. My latest position, VC Properties, is down a little bit. I'm not too worried about it. It's down 1.02%, both in gain, loss and FX impact. So, it's not too bad. I'm not too worried about it. It's going to fluctuate, a little bit. So I'm not too worried about it. It's just going to be something that I'll be holding and adding to in the future. When it comes to ETFs, I do want to add more to my ETFs. I have been slacking a little bit when it comes to adding funds to these ones. Yeah, so, oh, that's not even an ETF. This one here, I do want to still add more to these. I do think, it is definitely good to diversify. And yeah, I do want to start building up my ETFs and making them kind of a larger portion of my portfolio. And the last one I want to talk to you about is Alibaba. So Alibaba has had a little bit of a dip. It did hit lows of $180 this week. And I'm not surprised really, because especially with the Chinese government, they are cracking down on, I don't really know what they're cracking down. Their laws are so vague, especially with what they did to Didi. Since they IPO'd, they literally just blocked them from all the Chinese app stores, effectively, damaging their business model. So yeah, I do think it is a very tricky one, and there is definitely a little, a word of caution when you are investing in Chinese companies, because you don't really know what to expect. Because one day the Chinese government can be like, yeah, you know what, that's it, you're done. And then, start attacking the company, and, it's not going to end too well. Like at the end of the day, it's the Chinese government say, like, if they're going to be in business or not. I know that's an extreme way of looking at it, but it does make sense, like the way they've been operating and the way that the laws are so vague, and it's kind of like a way that they can twist it into whatever they want. It may sound like I'm hating, but it's not. I'm not. I do like some of the Chinese companies like DJI, Alibaba. I'm big fans of those two, and Tencent as well. But at the end of the day, there is a big risk on investing in Chinese companies, because I'm just putting a generalization on it. And yeah, you probably need to weigh up the risks when investing in any Chinese company, and there is a lot of fraud usually associated with them, with like Luckin Coffee and a bunch of other ones as well, which I can't remember at the top of my head. But yeah, that's it for this week. Hope you enjoyed it. Let me know in the comments down below how your portfolio is doing. Is there anything that you're thinking of buying? I'd love to hear in the comments. And don't forget to check out the description for a bunch of free shares that you can get from a number of brokers. But yeah, that's it for this video. Hope you enjoyed it. See you in the next one.